Perspective. We're joined this morning by Sivaramakrishnan Ganapathi. He's Vice Chairman and Managing Director of Gokaldas Exports. Just the right person to talk to also get a perspective about how global trade is panning out for your sector. Thank you so much, sir, for speaking with us here this morning on NDTV Profit.
Thank you for having me.
Let's start by getting your take on the impact of the rupee. Is this really a kind of a tailwind right now? Does it make you more competitive?
Certainly it does. I mean, for an export-oriented manufacturer, weaker rupee always helps. It reduces our cost of manufacturing vis-a-vis dollar. So, our cost inflation, which is all rupee denominated, has been on for the last, every year. And for the last 2 years, we've seen rupee fairly stagnant around 83 odd rupees to a dollar. So rupees, weakening now allows us to offset some of our cost increase. So obviously, it's margin accretive from that standpoint. So a weakening rupee does indeed help. Moreover, it also helps in being competitive in the market. So it is helpful.
To what extent, though? When you say margin accretive, to what extent can you give us an idea? And competitive to what extent? Vis-a-vis which nations? Because the Chinese currency also heading in the same direction. So does that advantage sort of pair off?
If you look at it from a global standpoint, obviously it's the relative depreciation which matters, right? So from a global competitive advantage, if rupee weakens more than any other competing country currency, then we have an advantage. But having said all of that, the global geopolitics is at the moment stacked against China. So there is obviously a lot of business flowing towards India for other reasons, not for rupee weakness reason. And then on top of it, if there is a weakness of rupee vis-a-vis the earlier position of rupee, I think it is helpful from a financial standpoint. I was only mentioning from that standpoint. But keep in mind that we hedge our receivables. So we hedge, into the future. So almost the next 2 quarters, we have already hedged, much earlier when we book the business. So this prevents us from, any currency volatility. So an immediate benefit from weakening rupee will not be felt in our P&L for a couple of quarters as we work on hedge P&L. But the direction is helpful from a longer term standpoint as a weakening rupee allows us to, build, since we bill our business in US dollars, a weakening rupee always helps us from a business standpoint.
Just one more point on okay, so we've talked about the rupee part of it, but there is a lot more going on in terms of impact on global trade. We could have a tariff war coming in. There is a textile hub, Bangladesh, going through tough times. How is all of this working out for the sector and for you, Mr. Ganapathi? If you can just give us a sense there.
Okay, so the global economy is all awaiting further announcements from the US, but at the moment it looks like Far East, which is China and maybe even Vietnam, may face some incremental tariffs. Time will tell how it pans out. So that automatically means that there is a business movement or relative competitive advantage for regions like India, Bangladesh, Indonesia and other places automatically. Having said all of this, with the ongoing challenges in Bangladesh as well, political challenges, there are a lot of brands or retailers who are looking at sourcing or moving a bit of sourcing from those regions to India as well. So this has resulted in us, seeing a fairly strong order book. And we've seen that traction go well into the forthcoming, into this year. So there is a good amount of tailwind, and I think it will stay that way for some time.
Okay, Mr. Ganapathi, about a minute's answer, please. Slightly running short on time, but would this therefore mean that the currency depreciation, and very likely that will stay this way, plus the Bangladesh benefits that come in, and a new season coming up on the anvil, would mean that calendar year 25 could actually be strong for a company like yours?
Yes, absolutely. Unequivocally, yes.
Unequivocally, Yes, well, that is music to the ears. I know you can't talk numbers because you must be in a silent period, but we look forward to talking some numbers with you, sir, after your quarterly numbers are out as well, because that will give us a chance to kind of talk about those things too. But thank you so much for joining in and giving us this perspective. Really appreciate your time.
Thank you. Thank you. Appreciate it.
You know, it's great to hear positive commentary from companies, and Gokaldas Exports saying it's an unequivocal yes that calendar year 25 will be better than calendar year 24. Okay, so that's great news. Not so great news for HCL Tech, I'm afraid. Tamanna.
Yeah, and even Gokaldas Exports, I mean, stock not reflecting right now because I think that uncertainty on the rupee is one big factor. Look at HCL Tech right now, about 9.5% down, and you know, our colleague Sajid Mangat has put out some of these reasons, perhaps why. We'll get him in for a more detailed conversation before we hear from HCL Tech, which we will in about 50 seconds or that countdown on your screen. But you spoke to the management unit, so I'm wondering what your view is. The point that total contract value all-time high, but TTM down 10%. Guidance is weak. I don't know if the guidance is weak because revenue guidance was actually put up.
Yeah, the lower end of the guidance is up. In fact, the commentary, the nature of the commentary also in the call yesterday and even in the conversation today seemed to be strong. But in fact, which is what we should try and do first. Before we talk to Sajid, maybe let's just try and hear out what the management had to say with regards to these numbers and the outlook ahead.